Hello and welcome to another update video about oil. Really only a quick update here to highlight that I still do expect lower prices. We've seen a little bit of a recovery in the last few days after we made an expected new low here. We have now reached a key support area. I think I flagged up that key support before around $87. Why is this relevant? Well, if we zoom out, you can see that is the top of a previous wave 3 from October 21. And that is quite relevant, in terms of support. That's one reason why we probably came down to that level and found some support. Overall with oil, if you followed my previous analysis, you know that we have expected lower levels, that we still expect lower levels. The question is only how do we get there? The overall target range to end the current wave 2 correction in which we are, based on the Elliott waves, it counts as wave 2. Which would eventually take us ideally into the region between $42. I mean, that's my worst case, to 76. I know in such a current, like an environment like the current one, everybody is expecting higher prices and inflation. And well, maybe not everybody, but most people do. Similar like, what people expected for the gold price. Also here, I told you already in the beginning of the year that we will see much lower levels, which played out here with oil as well. Talked to you in March already about a 50% decrease from the oil price. Now, so far, I think we've seen like 20 to 30%. I think there is still some scope for lower prices. And if we see from the top here, which was reached in March 2020, from that wave 1, we have there are two ways of counting this. The one is in an ABC correction in a wave 2. In that ABC correction, we are now in the wave 3, and the main primary scenario would here be to go down straight away next we are based on that in this wave C in a 5-wave move. The wave C is a 5-wave move, and in the 5th wave basically of that one. And here we have subdivisions as well. So the idea in this scenario would basically be to go down straight away to reach this area, and then have a substantial and sustainable reversal from here. That would eventually take us above $200. That will take a while to play out, but that is how I see it. In the alternative scenario, and to be honest, probabilities are very close together here, I would count the entire correction as a so-called WXY correction. It's just a bit of a more complex corrective pattern in which we have normally a 3-3-3 correction, so 3 waves in each of these legs. In that scenario, we would be in a wave Y. So all you need to do is to replace the wave C with the wave Y. But then within the wave Y, we have an ABC. And this is exactly what I've highlighted here in red. So here we have the situation that basically now we would recover in a wave B. Now this can take us into the region between 105 to 121 US dollars. And from here we would then come down in a strong wave C. So here we have currently basically we're at the crossroads situation here, where we could go up, but then eventually will come down into this area, or we go down straight away. It's a little bit similar to what I told you all along with Bitcoin, since basically November, that there were always potentials for, let's say, a corrective move to the upside, but then eventually the plan was always to get into the region below 30K. And this is the same situation here. There is a potential for a recovery to the upside and then to come down impulsively. Key levels to watch out for here. When can we be more certain? So if we break below $87, I think this primary scenario plays out with move straight away down. If we go above the wave 2 high here at $98, then I think it's more likely to see this extended wave B recovery. I think this is sort of the situation at the moment, and that's how I see the market. Overall, still lower prices expected. One more thing to point out here is the indicator side, especially on the monthly chart. On the monthly chart, on the MACD, we have just ahead of us a bearish crossover on the MACD. That is very bearish. Last time we had that, we saw massive price decreases here. That was in October 18, we came down strongly. That was here in February 12, we came down strongly. We don't see that very often on the monthly. And the time before that, that was in November 2008, before or just at the beginning of this massive crash. So either warning signs and overall lower prices expected. Of course, short term there is the potential for some recovery, but that would be a trade. If you wanted to trade this would be against the trend, because the trend at the moment is down. I mean, the overall trend is up, but let's say the medium term trend is down, and if you have the short term trend up, you would still be trading against the higher level trend. So yeah, this is my view about oil. Just want to keep you updated. No change to plan, but I added this alternative count now to the chart that we need to be aware of, because we don't want to be caught out. And that's my update. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, also check out my main channel, More Crypto Online. Bye bye.